Well, hello, everybody. Steven Sitkowski here, and welcome to this edition of Market Insights. It is May the 5th. Hope you had a splendid weekend. It was great for me. Um, and the markets have been cooperating. That's been nice. We had a major announcement today. We're going to talk about that and a whole lot more. Quick reminder that everything that we do here is for educational purposes only, not intended as investment advice. These are just some of my observations on the market, some thought about where things are headed, what you should be looking for, etc. So what's moving the markets? I was wondering if I would ever see this day. Warren Buffett stepped down as the CEO of Berkshire Hathaway. Shares have fallen a little bit, but they have a machine built. I know I'm doing covered calls on B shares, and I'm not in the least little bit, concerned about. Buffett no longer is CEO. He will be chairman, 94 years old. That's the way I want to go out at 94 on my own terms. Be sitting here getting ready to do a market insight and let you know I'm going to have to pass it on to some youngster who's 80 who's going to pick up the mantle for me. But I think he has done more to promote investing than anybody else in the history of the financial markets. We owe him a debt of gratitude. And what a class guy, interesting, quirky. If you read about his life story, it would shock you. The S&P is riding a 9-day winning streak. We're down so far this morning. We'll see how we finish up today. India proposes zero tariffs on certain items like steel, and so these would be reciprocal zero tariffs. And auto parts, although I got to tell you, Trump was talking a little tough today, and every time he does, the market goes down. Whether you agree with them or not agree with them, that's not the issue. But he came out and said, we're going to do deals on my terms. I prefer the softer version. Hey, we're making progress. There's a little bit of give and take. The market likes that. But in any event, I feel like we're getting close. By the way, he acknowledged that he and the president of China are not having conversations. So that's not great. 10-year Treasury is pretty steady at 4.34 ahead of the next Fed meeting, which is coming up in 2 days. And they're basically going to announce that interest rates are going to stay the same, but it will be the comments that potentially are market moving. And oil prices, boy, they're way down, 56.65. I guess that's all part of that drill, baby, drill philosophy. You don't generally see oil prices stay below 60 for very long periods of time. So this might create some opportunities in the oil patch. We shall see. Market breadth. So here was something that was kind of nice. On the New York Stock Exchange, we haven't seen this in a while. There are more new highs than new lows. And it was kind of a push on the NASDAQ. So there you have it. And last week was a good week. Advancers outnumbered decliners by a lot on both the NYSE as well as the NASDAQ. What are we watching this week? What are the big announcements? So for today, we had the services PMI number come in and the ISM services number. Look at the beat on the ISM. So on the service side, the economy seems to be fairly robust. Trade deficit's not going to matter. That's all, trying to get ahead of tariffs. Wednesday, that's the biggie. It is the Chairman Powell press conference. That's what's going to move things. On Thursday, initial jobless claims. We're expecting that to jump a little bit to 230,000. It's generally been around 2.25. Last print was 241. And wholesale inventories, not going to be a factor. And then you get a whole bunch of Fed speak on Friday, no data announcements. So kind of a slow, candidly, a slow news week outside of the Fed. This is last week's heat map. Look at Microsoft with a big move up 11%, Meta 9%, energy stocks down. Of course, look what's going on with energy prices. Walmart and Costco just keep chugging away. Really good covered call candidates. Financials pretty good shape. Berkey B was down a bit. I think in anticipation of the Warren Buffett announcement. And year to date returns been kind of a mixed bag. Tesla down 31%, Nvidia 15%, Palantir up big, 62%, Netflix 27%. So, it's been an interesting year. Looks like a few more issues are green than red, but those that are red are big red. GDP took a dive. Normally, I would be really concerned about this. GDP print came in at minus 0.3%, but a big reason for that is imports were up 41%, with companies trying to get ahead of the tariff. So they're buying foreign goods. That's money that gets sucked out of the country. It reduces GDP. From an accounting perspective, it doesn't make a hell of a lot of sense to me that should be a subtraction, but it's the way that they do it. Otherwise, we'd have had a positive GDP print. Inflation is tame for the time being. PCE, look at this, headed in the right direction. So the Fed is doing their thing. They're going to get us down to 2% at some point. Plenty of earnings announcements. I don't know that we've got, a ton of big market movers. Palantir after the market today. Is Ford going to move the market? I don't think so. Marriott, no. How about Ferrari? Ferrari can move, just not going to move the market. So most of the S&P is already announced. Shopify could be interesting. Same with Coinbase and Affirm, because those are, Coinbase obviously related to crypto, Shopify and Affirm the economy. So market sentiment, even though the market's been making a comeback, up 9 days in a row, look at market sentiment. It actually fell. It is now on the bullish side down to 20.9%. I'm not sure I've seen that before. That may be the lowest since they've started doing this survey. And the bearishness, this is over the next 6 months, 59.3%. So people are just scared of tariffs. We need some good news on that front. In terms of rate cuts, there's a 95.7% chance we're going to get no change on the 7th. And now there's a 70% chance, boy, this is a big flip, that we go no rate change in June. Now they're calling for it in July. We used to have 1, 2, 3 rate cuts as opposed to 4 last week forecasted, with the 4th rate cut not coming until March. So maybe this is because the 10-year has rebounded a bit. But of course, this is fluid, changes from week to week. Sector returns year to date. So the S&P 500 is only down 3.67%. And of the 11 sectors, 1, 2, 3, 4, 5, 6, 7 are higher, 4 are lower. This has been the drag on the market: technology and consumer discretionary. Outside of that, it's been a decent year, not gangbusters, but a decent year. Take a look at the charts. They are the tellers of all. You know, whenever anybody asks me my opinion on what do you think of such and such a stock, my response is always the same. Doesn't matter what I think. What does the chart think? That is the collective mind of the market. So, what do you see on here that is significant? We have crossed back up above our 50-day moving average. Ta-da. So where's the next support level? Right in here at about 5,800. There's pretty strong support because this was previous support. Or excuse me, I'm not talking about support level, resistance level. So this was previous support. This was recent resistance. So, you know, in order for us to start feeling a little froggy about things, we need the market to move up above 5,800. Right now we're at 5,671. But hey, we've been going the right direction. And then how about the Qs? So this is big tech also above its 50-day moving average. So it is nice to have some good things to report to you. So we'll be keeping an eye on all of that moving forward. So until I see you next week, I hope you have a fantastic rest of the week. Be safe, be blessed, and bye for now.